The long-anticipated CPI inflation data is finally here, and it's sending shockwaves through the markets. Economists predicted it, traders braced for it, and now the numbers are out. But what do they mean for you, the everyday person, or for the markets? With inflation becoming a constant headline, the latest CPI report today is a reality check for global economies. Here's why. Inflation isn't just a number, it's the pulse of our financial system, shaping everything from the cost of your groceries to the value of your investments. What is the CPI and why should you care? If you're wondering why CPI data is such a hot topic, let's break it down. CPI, or the Consumer Price Index, is more than an economic indicator. It's the tool governments use to measure the real cost of living. The CPI inflation data tracks the price changes of everyday goods and services. A high number in the inflation report usually means consumers are paying more for the same items, which can squeeze wallets and savings. A lower CPI reading, relief for households, but also questions about the strength of the economy. The big reveal, what today's CPI data tells us. The CPI data release has revealed a surprising twist. Inflation is rising, falling, and the markets are reacting like never before. The latest CPI report today paints a vivid picture of our economic landscape, signaling changes that will affect every corner of the economy. The data shows shifts in key sectors, energy, housing, and food prices. Investors and policymakers are now grappling with what this means. Will the Federal Reserve adjust interest rates? What's the ripple effect for wages, loans, and everyday spending? Market reactions. Crazy volatility. As the inflation data hit the newsstands, Wall Street erupted. From wild swings in stock prices to cryptocurrency turbulence, the CPI data is shaking up the financial world. Stocks in sectors like technology and real estate are fluctuating based on inflation sensitivity. Bonds and treasury yields are shifting, reflecting changes in interest rate expectations. For everyday investors, the market feels like a roller coaster, full of uncertainty and opportunity. You may think the inflation report only matters to traders, but its influence is far-reaching. Consider these real-life examples. Higher CPI numbers could mean your rent goes up or your grocery bill spikes. Savings in low-interest accounts may lose value due to inflation. Budgeting for vacations, education, or even essentials might get tougher. With the CPI inflation data in focus, the big question is, what happens next? Economists are split, and their predictions vary from stabilization to escalating challenges. Analysts point to geopolitical events and supply chain disruptions as wild cards. Will the Fed take aggressive action? How might this reshape our economic future? When CPI inflation data is released, its influence ripples across global financial markets, shaping the behavior of traders, investors, and institutions. Here's a closer look at how different sectors and instruments react. 1. Stock market volatility. Technology stocks are often sensitive to inflation due to their reliance on growth capital. High CPI data can signal rising interest rates, which increase borrowing costs and dampen growth expectations. Companies selling non-essential goods face pressure during inflationary periods as consumer spending shifts to necessities. Energy companies and commodity producers tend to perform well during inflation spikes, as rising prices directly benefit their bottom lines. 2. Bond market movements. Bond prices often fall when CPI data indicates rising inflation. This happens because higher inflation erodes the fixed returns offered by bonds. Treasury yields adjust upward, reflecting increased expectations for Federal Reserve rate hikes. 3. Commodity prices. Investors often turn to gold during inflationary periods as a safe haven. A high CPI report can boost demand for precious metals. If the inflation report highlights rising energy costs, it often translates to higher crude oil and natural gas prices. 4. Cryptocurrencies. Bitcoin and other digital assets sometimes behave as inflation hedges, though their volatility makes this a risky assumption. After the latest CPI data release, fluctuations in cryptocurrency prices showcased investor uncertainty about fiat currency stability. Understanding how inflation data has impacted markets historically provides valuable context for today's developments. During the 1970s, CPI inflation rates skyrocketed due to oil shocks and loose monetary policy. The result was stagflation, a toxic mix of high inflation and stagnant economic growth. Stocks underperformed while commodities like gold surged. Central banks eventually raised interest rates sharply, leading to a prolonged recession. Leading up to the 2008 crisis, inflation was relatively stable. However, after the market collapse, the Federal Reserve injected liquidity into the economy, sparking concerns about future inflation. Although inflation remained subdued post-crisis, the period taught investors to monitor CPI data closely as an early warning signal for economic instability. In 2020 to 2021, supply chain disruptions and unprecedented fiscal stimulus caused CPI inflation to rise rapidly. Tech stocks and cryptocurrencies soared as investors anticipated continued low rates. By 2022, as CPI numbers climbed higher, central banks responded with aggressive rate hikes, leading to significant market corrections in equities and bonds. Today's CPI report reflects unique challenges, a mix of supply-side shocks like energy prices and demand-side pressures, such as consumer spending. Unlike past inflationary periods, technology and global interconnectedness have introduced new dynamics, making predictions more complex. Understanding historical patterns helps navigate today's market turbulence. Whether you're a seasoned investor or just getting started, monitoring CPI inflation data is critical for making informed decisions. The CPI data release is more than a statistic. It's a wake-up call for all of us. In an age of economic uncertainty, staying informed is your greatest asset. Share your thoughts. How do you feel about today's CPI report? Like and follow for more updates on the ever-changing financial landscape.